You're listening to Economics Detective Radio. Hello and welcome to the Economics Detective Podcast. I'm Garrett Peterson and my guest today is Mark Blyth. Mark, welcome to Economics Detective Radio.
It's very nice to be here.
It's very nice to have you. So our topic for today is a book called Angrynomics, co-authored by Mark and his co-author Eric Lonergan. The book deals with public anger and its relation to economics and economic systems. And I'll get Mark to explain it in greater detail. So, Mark, how about you start by telling me a little bit about the inspiration for this book? What made you want to write about anger in relation to economics?
Two main reasons. The first one is because the world is very angry, and faith in existing institutions and in existing paradigms of thought, not just economics but elsewhere, seems to be fragile at best. So there was a kind of external push to think about this a little bit more. The other aspect was much more personal. During the research for my prior book, Austerity, The History of a Dangerous Idea, I wanted to meet bond market vigilantes. And Eric is, to some extent, a bond market vigilante. And I met him and I found that he and many other people really weren't vigilantes at all. And the perception that they were just waiting there to basically short governments into the ground really wasn't the case. Most fixed income investors, bond market guys, really just want their fixed income and are sensitive to one or two things happening, like default risk, and worry about those sort of things and act accordingly. So I struck up a good friendship with Eric, and we kept meeting at finance conferences. And eventually someone said to us, you guys are always good talking together on these panels. You really should sort of like think about what you would like to do together work-wise. And then we thought we would do something not so much on anger, that came through the research for the book, but basically on the current moment. That is to say, post-financial crisis, we fixed the system without really changing the system. That seems to be producing a lot of unintended consequences and side effects. How's that all going to end? And the answer ended up being with a bunch of people being seriously angry.
Yeah, and I'm in some ways, we're recording this in June of 2020, but of course you started writing the book before current crisis with COVID-19 and then the George Floyd protests.
Oh, long before. We started doing the first version of this in 2017.
Yeah, okay. So after Brexit and the election of Donald Trump, the important events of 2016, but then you published the book right into the sort of next big, wave of sort of crises and protests and public anger that I noticed you do have a postscript about the pandemic, but it seems very prophetic almost to focus on this because it's turned out to it's ramped up to 11 just in the past month or so.
Yeah, well, to a certain extent, I think I'm kind of cursed with this in that the austerity book came out right at the moment when austerity was really reaping its worst damage. And now, I did the global Trumpism stuff just before Trump came, and that seemed to be somewhat prophetic. And now, Angrynomics is there in the COVID moment. So perhaps I've got a knack for sniffing out moments of extreme stress. I'm not sure that's necessarily a good thing. But to go back to the book for a minute, the other interesting backstory on writing it was how we wrote it. Neither of us had the time in 2017 to basically sit down and write a book, and neither of us wanted to do that. We wanted to write something that captured more of the spirit of the conversations we had when we did panels together. So we decided to record it, and we met in London, did a pile of reading for different discrete chapters that we decided that we wanted to talk about, and then we just recorded it with a couple of iPhones. So Siri translated it, good luck with that, with an Irishman and a Scotsman, and put it into normal text. And when we read it back in normal text, it didn't read what we wanted. It read like another boring economics book where two well-off white guys set the world to rights by telling them how clever they were. So we put it back into dialogue format and then really played with the dialogue a lot more aiming at the target audience of not economists and not our peers, but basically someone who is your, smart reader in an airport who's got 3 hours to kill on a flight and wants to learn something but doesn't want to be intimidated by it. And hence why it ended up in a dialogue format and basically tackles these issues the way that it does.
Yeah. I was going to mention the format of the book is quite interesting. Each chapter, starts with a parable, a little story that illustrates the point, and then a dialogue between you and Eric, with one of you speaking, then the other, like it's a transcript. But
and it really was. I mean, we didn't write that after the fact. And that's genuinely, I would honestly say that's 85 to 89% of what we did on those takes.
Nice, but cleaned up, because when you read an actual transcript, it needs to be tweaked just a little to be more readable when you're than listenable.
Not all my sentences are grammatically perfect. That is absolutely true.
But yeah, it is sort of nice way to do a book. I'd like to see more books like that. It's got a sort of Socratic element to it, except of course if it were Socratic, one of you would just be there to present terrible arguments for the other one to knock down, but that's not the case. So let's talk more about the topic of the book. So you start the introduction with a discussion of Iceland and its response to the 2008 crisis. Do you want to say a little bit about that and how it illustrates a point about Angrynomics?
Certainly. So the opening line of the book is something to the effect of, a good society is one that can survive a punch in the face. Both of us are fans of Nassim Taleb's concept of anti-fragility, things which are not only robust to shocks, but actually deal well from shocks. And basically, certain societies that have institutions which are, in Asimov's terms, inclusive, but more precisely are broadly redistributive and have a high degree of popular support, tend to weather shocks very well, and in fact can actually lead to positive outcomes. So Iceland sort of shows two sides of the story. When their banks went bust in 2008 with 1,000% of GDP and the whole economy went down, there was a lot of opprobrium directed towards bankers and central bankers, a little bit towards politicians, but basically the community kind of came together and said, we're going to have to do capital controls, we're going to have to do all sorts of horrible things for a while. But essentially they didn't slash their welfare state to pieces, they didn't try and do austerity rebounds, and they actually survived and basically came back rather strongly. And keeping those institutions in place allowed them to redeploy their talent and their capital, and they got past, if you will, or they avoided a kind of angry trap. What got them angry was much later, in 2015, 16, 17, when they began to figure out that the elites that had seen them through the crisis and had also caused the crisis were banking all of their money offshore, and we found that out through the Panama Papers. And at that time, they really got angry. And they got angry in a way that they hadn't done in the financial crisis. And we thought this was fascinating, because it told us something about the importance of anger as a misunderstood emotion. Everyone knows anger when they see it, but what does it mean? What's the information content of anger? What is it that you're listening to when you hear anger in certain moments? And what we learned from Iceland was that call for, if you will, transparency, but more than that, a kind of call out of an elite that had basically was playing by different rules from what the mass of people were. That's what provoked the anger. And that was something that we saw as very common right across the world. Not so much a loss of faith in elites, but basically they keep getting caught with their hand in the till and they never get punished. How long do we have to put up with it? It's the feeling of anger driven from exasperation. And that's what we sort of started with at the beginning.
Yeah, and it's interesting that the Panama Papers were the trigger and not the global financial crisis several years earlier. It's not all bad things trigger protests or sort of a righteous kind of response, and it doesn't seem to me like there's an obvious pattern in what does and doesn't make people anger. You also make this distinction between public anger and private anger. Your book is more focused on public kind of anger, not just people getting mad in traffic when they get cut off.
Yeah, no, it's absolute. So basically the framework that we ended up finding through our discussions, we didn't go in with this, was, and Eric did an awful lot of reading in fields like neuroscience and moral philosophy and so on and so forth to back up his intuition on this. But essentially, we made a broad distinction between public anger and private anger. And in the middle of the book, we talk about macro angrynomics, which is the type of anger you get from big financial crashes, but also micro angrynomics, which are the day-to-day stressors which get to you mentally, physically, epidemiologically, and seem to be increasing with time, and is compounded by things like technological change and aging in the population. So we do try and separate those things out. In the category of public anger, we distinguish between moral outrage and tribal energy. The former being a call for redemptive justice, a call to pay attention or desire to be heard in areas whereby you felt that basically elites have either shut down the conversation or do not care about the suffering that you're going through. Fill in any amount of protest or actions into there. The other side of that then being what we call the energy of tribes. And this is essentially norm regulation within groups when you have heightened uncertainty. The thing that twigged us onto this was we went to IBM Watson Analytics and got it to do a big data analysis of anger in newspapers. And an awful lot of what we found was angry football supporters and soccer supporters and people smashing things up in Philly when they win tournaments. And we began to reflect on this, and we noticed ourselves, because we're both keen soccer fans and go to games whenever we can, that the angriest fans are not actually fighting other fans, they're policing their own. And what they're doing is demanding loyalty, demanding in-group kind of conformity. And why do they do that? Well, in wider groups, and what the literature tends to suggest, is that when humans are confronted with external stressors which increase their sense of uncertainty, they have this feeling that control is beyond them, that their first best strategies lead to second best results. That's when they value being members of a group, and that's when they look to have these kind of in-group norms that allow them to basically stabilize their lives. So we think about what social media has done. Rather than giving us more and better information that we all arrive at some kind of composite of the truth, we splintered into endless tribes of 4chan conspiracy theories on the one hand and anti-vaxxer narratives on the other, all of which can be seen essentially as attempts to regain control over uncertainty. So that then gets weaponized by politicians. And Trump is the great example of this. He can go up to the Midwest and tap into a ready-made constituency that is the moral outrage that the Democratic Party has not only failed to represent their interests, it has actively given up on them and exploited them by expropriating their wealth and shutting down their industries. And then pivot and go down to border states and talk about Mexicans as rapists and the integrity of the American nation, weaponizing anger on one, or embracing the kind of moral outrage on the other. And that's the two faces of anger that we explore in the first part of the book.
I like the parallel between football clubs and political parties. On the surface, they seem very different, but if you think of a political movement as just a football club that instead of playing games, they put up candidates for election, the dynamics are remarkably similar, or at least parallel.
Absolutely. Yeah, well, and also if we think about protest movements, when do protest movements emerge? They emerge in moments of heightened uncertainty and stress. They usually make profound moral claims, but it's that background uncertainty that makes them pop up in the first place. How do you keep people on board? You do it through reinforcing group identity. What is the purpose of this group? What is it that we are fighting for? And you do that by becoming one of the real core members of the team. So we do this in a synthetic way through the internet, through the different tribes of the internet. We do this in politics, we do it in sports, but most of it is generated by, we contend, a feeling that not only are we no longer really in control of our own destiny, those who are either don't care or are basically manipulating that destiny for their own ends.
Yeah, and you could sort of see people have this desire to fit into part of a tribe and have their group, and it makes them feel safe and welcomed and all these sort of positive things. And you can sort of see how a society that is working for most people, where everyone is sort of pretty content with their lives, would want to have tribes competing over something like soccer, something artificial that just gives us something to be tribal about. Whereas a society that maybe has more conflict, more uncertainty, more sort of bad things happening to people in their real lives that affect them in important ways, would have us have tribes that were more focused on real things and issues and fighting with people who we have like real serious contentions with, not just that they support a different soccer team.
Yeah, exactly. I mean, another way to think about it is high trust societies, which, the Scandinavians always rank at the top of this, are the ones that tend to have encompassing political and economic coalitions, and also universalist types of welfare states. In a sense, what they're saying is we're all in the tribe. Whereas what you have in much more residualist welfare states are ones based upon division of who gets the benefits and who does not, which instantly politicizes them. So I think that's a very pertinent observation.
Mm-hmm. One analogy you make in the book is to the economy as a computer system, and the 2008 crisis as a crash, with elites kind of slapping a patch on top of it immediately thereafter. And then you made this analogy that I really liked about populists being the sort of rogue hackers, writing new code that to fix the problems that people have, when the admins only put on a little patch, but they're just bad programmers, so they're tapping into these real concerns.
Yes, we use a stronger word than bad programmers, but yes, that's exactly right. Yeah, I mean, the way that evolved, again, actually came through conversations. I'd been trying to explain at various sort of finance and other conferences for general audiences, how to think about financial crashes. And this note that I'd been playing around with in my head, or this leitmotif, was essentially that capitalism is essentially like a computer. It has different hardware configurations, but the components are all the same. So Germany has a labor market, the US has a labor market, Nigeria has a labor market, but they're all massively different from each other. America has enormous capital markets. Half of all German firms never list on a bourse, right? So the capital markets vary in size. But they're all essentially the same. They can be put together in different packages, but essentially they're run the same way. And at any given moment in time, there's a set of rules, OSs, if you will, operating instructions, that tell the machine how to work. Now, what happens in the world is both in the real world, and like our descriptions of it in economic theory, that world evolves, right? It begins to change. And then the software rules are no longer compliant with the underlying hardware configurations, or vice versa. Over time, a series of incompatibilities develop and the system crashes. So that was the analogy. Now, how do we think about this concretely? Well, if we think about the 1970s, you had, coming out of the early post-war period, a series of national economies with what political economists call largely Fordist production structures, whereby you had very little movement of finance, everybody made more or less the same stuff, and basically traded a bit of it with each other. Well, that creates a problem, which Mikhail Koletsky, the economist, pointed out back in 1943, that if you run full employment as a policy target for an indefinite period of time, wages must outstrip possible productivity gains. The only way that business can cope with that is by passing on prices, and that leads to cost-push inflation. That then scares the investor class. I-star investment demand dies, and you end up with a situation which he didn't coin the term, but he described stagflation. So that was predictable, in a sense, from reading the software incompatibilities back in 1943. That's what happened in the 70s. Now, in the 70s, there was a fundamental reset. Along comes Reagan, Thatcher, the entire neoliberal revolution in economic theory, Sargent, Wallace, Prescott, real business cycles, the representative agents, all the way to DVSE. That changes the way that we can see the world. And the policy response, privatize, liberalize, integrate, globalize, creates a very different world, one in which price stability is the target, and the big hardware mod of the generation is the move towards delegation of policy, particularly independent central banks. Now, guess what the bug in the software there is? You begin to get wage stagnation and rising inequality because, as Piketty points out, the returns to assets vastly outstrip the returns to growth. Globalization squeezes that even more and creates that kind of hollowing out of the middle, which is very much part of the Angrynomics of the Trump coalition, if you want to put it that way, and the type of stuff that David Otter has detailed with China Shock and other people have pointed out too. So what did we do in response to this big banking crisis? Well, this time, rather than having a fundamental reset, as we did in the Reagan-Thatcher period, a fundamental rethink, we patched the software. The central bank came out and basically stuck trillions of dollars of yen and a euro and dollar liquidity in the system. And none of the underlying fragilities which were producing these inequalities were addressed. In fact, the policy response, cutting rates further and further, infinitely adding liquidity, a series of central bank puts without end, actually creates a worse system, because at the end of the day, asset prices become basically the target rather than price stability, and the returns to assets continue to outstrip the returns to growth in a secularly stagnant world, such that inequality, the problem in the first place, starts to get worse rather than better. So the purpose of the analogy is to illustrate how these mechanisms work through a metaphor of incompatibilities. But I think that they track really well onto the actual fundamental underlying causes of the anger that we see caused by macroeconomic crashes.
Yeah, and I would, to sort of add to your point, I'd argue that what central banks did and what governments did after 2008, they flooded markets with credit, but at the same time, they made it harder for, if you're a low-income person trying to buy a home, they made it harder for you to borrow in that case. They sort of tightened the rules, but in a way that especially limited access to the housing market, and that was kind of a response to the moral panic around subprime.
Yes. Another more contemporary example is student loan debt. So for the first time ever in American history, we've decided to basically cut taxes on everyone who has assets, who are primarily old people, and then make sure that we have a generation of people who will be future workers, consumers, and taxpayers who are massively indebted and don't have any assets before they're actually able to form assets in that critical period of their lives. We're essentially taking from the young to give to the old, and insisting that the young pay for it with no corresponding generation of asset. They just have debt. Right? So if you think about, the old models that we'd have of, life cycle, earnings, etc., all of that seems to break down when you start to say, okay, the young will be indebted and the old will have all the assets. And yet that's very much the world that we've built.
Yeah. So for listeners, economists have these overlapping generations models where you can have transfer from one generation to the next, and most of them tend to show that you can get, I might be getting this backwards, but is it efficient for the young to subsidize the old because...
Well, I mean, the standard generational story is you're asset poor when you're young and you're debt heavy. So that's how you get the intergenerational transfer. But then as you build assets and basically the older generation runs down their assets, you become asset rich over time. So there's this constant churning. But if you basically run a skew whereby most of the assets are with the old and 20% of old people have 80% of those assets anyway, so you've got a kind of like Pareto split within a Pareto split, then that degree of inequality means that unless you're lucky enough to be born into a rich family that's tons of property, you're kind of screwed. So that model just begins to really break down. And that seems to describe very much the type of intergenerational politics we're seeing now.
Yeah. So there's a way it can work where, you kind of subsidize your parents, but then your kids subsidize you, and everyone's better off as long as we keep going the same way for infinite generations, which the models kind of assume.
So, yeah, there's the assumption that nobody dies in these models and other things which are kind of problematic. But I mean, I use that just as an illustration of the broader point. This is what we talk about in micro-angrynomics, right? And this is a very practical way of thinking about it. If you're coming out of college with a huge amount of debt, levels of debt that we've never seen before, and the value of that degree in terms of its ability to get you extra earning power is declining over time, which seems to be the case, into a world in which growth is becoming harder and harder to come by, then you're basically got a ton of debt at the beginning, but no corresponding assets. Like if I borrow to buy a house, I still have the house as the asset. If I'm borrowing against my future and the future doesn't pay off, I'm just taking on debt for the sake of it.
Yeah, that's an intangible asset like a college degree. It especially problematic if it doesn't lead to a job, because if you're out of college for 3 years, maybe you graduate into a recession, that's going to tend to devalue the degree. And I mean, if you got a degree that maybe maybe there isn't a lot of demand for, you're doubly in trouble, but still you're deep in debt.
Yeah, I mean, if you graduate now, you're graduating into a huge recession. And we know that basically the hysteresis effects of this are such that if you don't immediately get employed, your lifetime earning is impacted. But this is all taking us far away from the book. Let's go back to the book.
Yeah. So these are just sort of many reasons why people get into this state of being angry and having sort of public anger towards broader systems that might make their lives difficult or impoverish them. One of your dialogues is called Moral Mobs and Their Handlers. You want to talk about how people sort of harness this energy and direct it towards their own ends?
Sure. Well, that takes us back to this notion of, uncertainty and control and the role of sort of norm regulation within groups and belonging to a group. So part of that we've covered. The part that we found particularly interesting, though, was a casual comment that Eric made in the conversations was, if you go to America and you look at American media, of course, everyone's familiar with the polarization that you get there with Fox on one side and CNN on the other. But what people tend to discount is the symbiosis across the system as a whole. If Trump didn't exist, CNN wouldn't have a business model, because everything that they report is on how bad this guy is. Similarly, Fox has a business model that says everything that they say is wrong, this guy's actually doing great. So there's a symbiosis that goes on in the system between politicians who make these type of populist identitarian claims, and then how that is refracted through a very, very fractured and politicized media landscape, which then gives them, if you will, their tribal voice and their tribal energy to speak to the people whose preferences are self-selected along these axes. And that's why it becomes very difficult to have any type of genuine dialogue or to talk in more than sort of fantastic terms about the notion of cross-party, etc.
Yeah, well, the soccer analogy is again useful. A soccer club doesn't succeed by permanently destroying its rival club, because the rivalry is valuable. It's what keeps the fans coming, keeps the sort of intra-group unity. When you sort of realize that these different political factions are sort of parasitically dependent on each other, it's troubling for being able to, because we also depend on them to make good policy.
Well, exactly. And, we hope that they take a holistic view of economy and society, etc., rather than it being partisan. But of course, we do tend to see that these things are becoming more and more partisan over time, which is, an example of it. But to relate it back to the core thesis of Angrynomics, I mean, just go back to 2008. So in 2008, we have a big crisis. We have in one reading of it, which I like, essentially socialism for the rich and capitalism for the poor. So you get austerity if you're a wage earner, and unemployment if you're a wage earner, and a recession if you're a wage earner. But central banks step in and guarantee your asset prices, and you get an asset boom through quantitative easing if you're on the other side of that asset distribution. There used to be that the mantra of bank reform was bail, fail, send to jail. Well, in 2008, we didn't really fail anyone. Absolutely no one went to jail, and everybody got bailed. And the asymmetry of that put is incredibly obvious. Now, how people interpret that information, that's where the tribal part comes in, because it gives you everything from Occupy Wall Street to the Tea Party exactly the same moment. So the same information is being filtered in different ways, encoded in different ways, and then acted upon in different ways. And if we think forward to the COVID crisis, the same thing has happened, only in an even more extreme form, whereby the Fed has basically said, we will catch every falling knife that there is to put a floor under asset prices, with the consequence that the stock market is bizarrely booming at a time when 9 out of 10 countries are in recession and unemployment has gone through the roof. And that disconnect is, again, something that is powering anger. Because, again, I always like to say, people aren't stupid. They know when they're being ripped off. And if you continue to run a system whereby the asymmetry of the put is so obvious and so glaring, people will reject the contract on offer. And that's what we see.
I forget who it was on Twitter, but someone was saying that every single person they talk to is just baffled why the stock market is doing so well. I realize that the stock market is not a good measure for how well the economy is doing. But usually it goes down when unemployment goes up and vice versa. And if lots and lots of companies have to shut their doors and stop doing business, you'd think that would not be great for asset prices. And yet we've seen exactly the opposite. Some money I invested right before COVID is doing just great.
Mm-hmm, exactly.
Yeah, and it does seem profoundly unfair.
Yeah, well, essentially you have asset insurance through the Federal Reserve, right? They basically said from Greenspan onwards, every time there's a bump in the road, we will cut interest rates, and when that isn't enough, we will actually buy the assets and put them on our balance sheet to make sure they don't lose any value. So what we govern is the level of asset prices. It used to be we cared about full employment. It used to be price stability. Now it's basically become asset prices. And the belief that if you stabilize those, then somehow the rest of the economy will be okay. I think it's a very dangerous and false set of ideas, but nonetheless, they're the ones that we're being governed by. As to whether this is a mystery or not, I don't know. I actually think, I don't know, maybe it's a mystery amongst people who study economics, but most ordinary people I talk to completely get it. Where's my bailout? They look in the newspaper and they see that Boeing does 48 billion in buybacks and gets 50 billion in cash just for showing up. Meanwhile, they lose their job. And if they don't have a bank account or if they don't have a tax return from last year, they might not get $1,500. You don't have to be a rocket scientist to figure out you're being ripped off.
Yeah. And I don't know. A pandemic seems like just the textbook example of a real shock, right? And so it seems kind of strange to try to goose the economy with cheap credit and when it's so clearly been hit by a real shock that is not just going to go away because asset prices stay high. We're all still stuck at home trying to avoid a deadly virus, and many people can't work because of that. And that's there's no level of interest rates that makes that go away.
No, absolutely. But I mean, when you think about the response of most European societies, has been essentially to furlough the workforce and do helicopter money for an unlimited duration of 80% of wages, which when no one's out spending money actually leads to higher savings. And that basically keeps the capital intact. I mean, the way that I think about the differential response of the US to the rest of the world is, I've got a little film out there if you want to link to it when you put this out. It's called The Mustang and the Volvo. That essentially the US is a Mustang. It's 5-liter GT thundering down the road, turbocharged, supercharged. Everything's great so long as you don't try and park it very, very quickly. Because if you do, all the bits come flying off. On the other hand, the Europeans built a Volvo. It's got airbags everywhere. It costs a fortune to run it. But if you crash in it, you'll probably survive. And that's the basic difference between the two economies that we've got. You cannot, when people say you can't close down the United States, you're right, you can't. It doesn't have any airbag, shock absorbers, or anti-fragile characteristics. It goes in one direction and it goes fast. The Europeans, on the other hand, lower growth rates, higher taxes, bigger airbags. So it's a question of which one you want in a pandemic. And because of that, the United States has, at this moment in time, the worst of all worlds. It targets asset prices and tolerates incredibly high unemployment.
Yeah. What is... I know in the book you and Eric propose a solution to calm down the sort of the anger that the system sort of habitually creates. Talk a bit about that.
So big financial crises have been increasing in both frequency and magnitude. And if you look at the scale of spending that we've done to bail out asset holders on everything from the peso crisis in 94, which is 40 billion, to the East Asian financial crisis, $250 billion, to the global financial crisis, which is by some estimates 13 trillion. We simply can't and shouldn't keep doing this. It's ridiculous. So how do we do this? Well, in highly polarized, hardly partisan societies, which are also federal like the US, it's very hard to get anything done. So perhaps these are more for countries that are on smaller scale, that are perhaps less polarized, a bit more trust still lives in the system. But nonetheless, we think about it this way. I think of these things not as policies, but as furniture. And here's what I mean by this. If you get a room full of people, they can all be strangers, they can all be friends, they can all be angry, they could be wanting to have a party. If you put the wrong furniture in the room, you'll ruin the party or you'll start a fight. So if you think of policies as things that you put in the room that change the way that we interact with each other, then they're more than policies. There's something that structures and restructures your politics. And that's why we chose in part the things that we wanted to talk about. So for us, remarkably, because of COVID, one of them started really give up on doing quantitative easing and start doing helicopter money anytime there's a recession. It is cheaper. It is more efficient. We know how to cure recessions. Trying to cure them through austerity is simply cruel and unusual punishment. Just do it. And in a sense, that's what a lot of countries under lockdown in Europe are already doing. So that's good. Second one we were writing about wasn't done at the time is now official policy in Europe. You could say that the Fed is de facto practicing this, which is dual interest rates, so that you can target with the negative rates private sector lending in specific areas of the economy. If you want to do decarbonization, this is a great way to incentivize it. And then bigger macro stuff. One is we're very fond of citizens' wealth funds. So every time there's a big crash, and they're increasing in frequency and magnitude, there's a counter-cyclical effect on the government's cost of capital. Very basically, when everyone has a panic, they crap their pants and they dump equities. Equities fall in value in panics in the United States regularly by 50%. This last one was no exception. Rather than waiting until the Fed comes and puts a put under that and private equity hoovers up all the assets to make concentration and inequality worse, why don't we actually buy those assets with our own bonds? Because those bonds are negative yielding, which means the private sector is giving you the money to issue the bonds. So you issue an extra 20% of GDP. They like that. It's called safe assets. And you use that to buy all those equities. You then lock them up in a highly diversified passive fund miles away from politicians. And you ride up over the next 10 to 15 years to 6% a year equity premium, at the end of which you would have an enormous fund that you could really affect major structural changes in the economy and do something about inequality by giving assets and asset ownership to the bottom 80% of the population. Again, this is a similarly pro-capitalist policy. None of this stuff involves raising taxes. Is the notion of a digital dividend. Basically, 20% of the stock market, if not more, is run by the FANGs, Facebook, Apple, Google, etc. They're large tax avoidance schemes and they're monopolists that inhibit competition and inhibit innovation in the economy. They buy up competitors and then shelve their tech. They're not great firms. But what they do is they rely on us giving them their data for free. That's their profit engines. And if we can't tax them directly, because America's just vetoed this at the level of the OECD, then why don't we basically have national trusts for data? People can opt in or out, and then we choose to or not sell to these companies the data that they use for their profit engines. You could then use the proceeds of that to basically further the equity purchases or diversify the equity purchases in the fund, or you could use this as the seed money for a universal basic income program or other income floors or wage supports if you wanted to do that for low-paid workers. So again, we're thinking about these things that are neither left nor right. They're not based on taxes. They're part of the furniture. Once you have them, it changes the possibility set of what you can do. It's not an exhaustive list. We're really just trying to begin a conversation. But we think these are good because, as the Brits say, they do what they say on the side of the tin. It actually is effectual. It's simple. People can understand it. And generally, once you explain to people, they go, yeah, that's a great idea. Why haven't we done that already?
Right. Let's tie this into Angrynomics. So the policies you're suggesting are things like sovereign wealth funds.
Citizens' wealth fund, big distinction.
Oh,
not for the sovereign, it's for the citizen.
Okay. But then you use them to fund things like universal basic income. And is that the main connection to reducing the anger and the uncertainty? Just like the idea of having a baseline where such that people can never fall to the point of being destitute. If there was a universal basic income and it paid enough that you just never had to worry that you would go without food or shelter, you think that would is that the main connection to Angrynomics?
Well, we're not setting all this up to like UBI is the one and only answer. I mean, actually, we're quite happy to sort of delegate what these funds are used for through the board that's set up to run the management, to basically send those out to much more local organizations to figure out what they want to do with it. So it's less about us saying, yes, this fund's a UBI. You could do that. That's just one of the things that we have there. It's more about the following observation. Like, it's absolutely true that countries that have encompassing welfare states also have populist politics. But they tend to be about one issue, about immigration. They don't tend to be, as they are in the United States, about immigration and about the cost of living and about wage stagnation and inequality and the simple fact that college costs $60,000 and that's more than your median income in a year for a family of four. That a cancer diagnosis in this society is a virtual bankruptcy notice rather than a death sentence. So there are certain basic things that we could fund in this country that would take an awful lot of the stress out of the lives of ordinary people. Would it solve all problems? No. But if you don't do something about those stresses and reducing those angers, you won't be able to tackle the big stuff. Now, what I mean by the big stuff? So I hate the phrase Green New Deal. And the reason I hate that is because if you know anything about American politics, the phrase New Deal is toxic to about 40% of the electorate. So calling it that, and also the jobs guarantee, which is, I think, a great idea. It's basically the counterpoint to the Fed having a floor for asset prices. We should have a public option for employment to protect labour markets. Well, what do we call it? The jobs guarantee in the United States, the individualist country that is the United States. So, this is terrible marketing in this regard. But the more fundamental point is this: at the end of the day, what's the challenge we all have to deal with? It's climate change. Now, we don't talk about it directly in the book, but given how polarized we are, given how angry we are, given how unequal we are, the notion that we're going to tell the 12 or 13 states in the US that make their living hauling, digging, transporting or refining carbon, that they need to stop doing that and be more like us liberals on the coast, it's going to get nowhere. You're going to only be able to do that with massive investment. You're only going to be able to do that essentially if you offer these people options out of those forms of employment and modes of consumption. And you're not going to do that if we're completely polarized and everyone in the economy is stressed and running in essentially, I'm going to put it, in more and more precarious employment and worried more and more about their futures. So basically our focus on reducing the anger is a first step, but we think a very useful first step.
Yeah, and the polarization is sort of self-perpetuating. Like you can see in real time, the pandemic. I keep coming back to it because it's all most people think about these days, including myself. There will be some new issue like mask wearing. It so quickly becomes tribal. Someone has to take a side. It has to be that, this tribe is pro-mask wearing and that tribe is anti-mask wearing. It can't just be a neutral thing. And it's kind of shocking because it should be neutral. It shouldn't be something that we immediately start sort of taking sides on and aligning them with, you can probably predict someone's opinion of masks by their opinion on gun control and abortion and other seemingly unrelated things. And that's kind of shocking. And I take your point about the United States having more conflict about more issues than a lot of these other countries. Like, as you mentioned, there is conflict around immigration in Europe, but I hadn't really thought about just how much less sort of populism there is related to other issues, maybe because most people are fairly satisfied with the way things work.
Yeah, and if they're dissatisfied, they're dissatisfied with the lack of credibility of their own elites. I mean, party systems in Europe have changed irrevocably over the past decade, and the French left, that was the party of Mitterrand until recently, now it's 7%. The German SDP is trailing along at around 17%. This is the largest social democratic party in Europe at one point. Macron won as a kind of centrist populist, bizarrely. The Italian party system's completely collapsed. So there have been big changes in these things. But, I mean, just take an example from just now with the resurgence of the Black Lives Matter movement in the United States. Now, this is about policing. This is about basic categories of freedom and the ability to live a life without domination from basically policing forces and being unduly subject to the kind of prison incarceration complex which seems to prey upon African Americans. But that's only one part of it. I mean, there's also an economics to racism, which has been at play for generations. So one of the examples of this, which I put on Twitter just a couple of weeks ago, there's a Boston Federal Reserve report that came out estimating family net worth, basically, in Boston. And if you net out the assets and the liabilities, white families, median white family, $247,000. Median black family, $8.
Oh, no.
Not a typo. $8, right? $8, right? In Boston. Now, you do not get inequalities of that scale without institutions perpetuating those inequalities over generations. Now, therefore, should these people be very angry about the way that they're being treated and feel that it is desperately unfair and it is singling them out? Absolutely, because you can't look at those numbers and say that happened because all white people are more talented by a factor of 20. That's ridiculous. So there are real institutional factors which are deeply imbued in the economy, which produce these inequalities, which produces this anger. And, our point in the book is, we don't talk directly about race. We don't talk directly about climate change. We talk about anger generated by economics, by the economy in the general terms. But this is all part and parcel of what we've got. We've got societies which generate profound inequalities, which are by themselves extremely stressful and anger generating. And we really need to do something about this.
So we're coming to the end of our time. Do you have any sort of closing thoughts, any general sort of takeaways that someone who's listened to this conversation should come away with?
That's an interesting question. What would be the first takeaway is go read the book. So that would be great. We've also got some cartoons coming which describe the book, so you probably find those popping up on social media. And if you're interested in my line on COVID, Google the Mustang and the Volvo, and you'll find it. Takeaway lines. Yeah, let me finish with a little bit more of a riff on that thing on climate change. If you look at the map of the United States, if you Google basically room for carbon taxes, you'll find this map pops up. And the places that have the most room for carbon taxes are, of course, the places that use the most carbon. And if you basically start in Alaska and then go down through North Dakota, South Dakota, Oklahoma, basically East Texas, along Louisiana, and go up to Western Virginia, you get what I call America's crooked carbon smile. And all of those states and all the people who live on those states basically depend upon, as I said, the extraction and refinement of carbon. If you want to do a green transition, sitting on the liberal east or west coast, driving a Prius and sipping a latte and telling those people that they're bad people isn't going to do it. The only thing it's going to do is to give them an alternative. The only way we do that is through massive public investment. And one way to do that is to do it in such a way that it basically raises wages for everyone and creates a genuinely broad and encompassing and just transition to a different type of economy. If you mention the word New Deal, you turn people off. Call it whatever you want. But this is something that we need to do. And Eric and I are thoroughly convinced, and we say this in the postscript, that unless you reduce the stresses, unless you reduce the anger, unless you restore the credibility, then it's going to be very, very hard to do this. And if we don't do it, we are in serious trouble as a species.
Usually I'd end right there, but it's such an interesting thought. You mentioned earlier in the conversation about how a lot of the sort of conflict is within groups, within your own tribe, policing sort of the attitudes and the structure within your own tribe. And I think green, calling something a Green New Deal and sort of directly placing it as making it something that is very appealing to your own tribe and very alienating to the other tribe and sends off every signal of being, this is our side, us versus them. There are many advantages to that, within the interior group dynamics, but there aren't many advantages in terms of actually passing a policy that actually, gets broad support and has stated effect.
Absolutely.
My guest today has been Mark Blyth. Mark, thanks for being part of Economics Detective Radio.
It's been a pleasure.
I hope you enjoyed that episode of Economics Detective Radio. If you want to check out the book or the video Mark mentioned, that's the Mustang and the Volvo, discussing the different economies of America versus Europe, I'll link to both of those at the show notes page on economicsdetective.com. If you're enjoying the show and want to help me keep the lights on here in my little studio, which is a part of my house, then you can support me on patreon.com/economicsdetective, where you can make a recurring pledge per episode in order to support the show. Thanks, and I'll be back soon with another episode.